This is the financial brief. Micron just became a $1 trillion company, and a global memory chip shortage is only getting started. Micron Technology surged 18% today, crossing the $1 trillion market cap threshold for the first time in the company's history. That makes Micron the latest chipmaker to join an extremely exclusive club, and it got there on the back of a global memory shortage that shows no signs of easing. The AI boom is the engine here. Every data center, every large language model, every autonomous vehicle prototype, they all need memory chips, and they need enormous quantities of them. Micron makes DRAM and NAND flash, the two types of memory silicon that power everything from servers to smartphones. Demand has been outstripping supply for months, and pricing power has swung decisively back to producers. For investors, this is a structural story, not just a momentum trade. The AI infrastructure build-out is a multi-year cycle, and memory is one of its biggest bottlenecks. Micron now sits alongside NVIDIA and Broadcom as a core beneficiary of that spending wave. But watch the valuation carefully. An 18% single-day move prices in a lot of optimism. If memory prices plateau or data center spending slows even modestly, the correction could be sharp. The key metric to track going forward is Micron's average selling price per gigabyte. That number tells you whether the shortage is deepening or beginning to ease. Meanwhile, in the Middle East, the situation around Iran is intensifying on multiple fronts simultaneously. The United States confirmed it conducted what it called self-defense strikes against Iranian missile launch sites and naval vessels that were attempting to lay mines. This comes as the Strait of Hormuz, the narrow waterway through which roughly 20% of the world's oil supply flows, remains effectively closed. Analysts now expect that closure to last months, not weeks. That is a staggering disruption. Crude oil prices are already climbing, and forecasters are projecting new highs this summer if the strait stays shut. President Trump is scheduled to host a full cabinet meeting at Camp David on Wednesday, with Iran at the top of the agenda. The administration appears to be pursuing a dual track: military strikes paired with diplomatic pressure toward a peace deal. For investors, the energy implications are immediate and serious. Higher oil prices ripple through everything: transportation costs, manufacturing inputs, consumer prices at the pump. Airlines, logistics companies, and any business with heavy fuel exposure will feel margin pressure. Inflation expectations, which had been cooling, may reverse course. Watch crude benchmarks closely this week. If oil breaks to fresh highs, the Federal Reserve's rate path could shift again, and that changes the calculus for every asset class. Turning to what's ahead for the rest of this week, there are several catalysts investors need to have on their radar. First, that Camp David cabinet meeting on Wednesday. Any concrete language around Iran, whether escalation or de-escalation, will move energy markets and defense stocks immediately. Clarity matters more than direction right now. Markets can price in war or peace, but they struggle with ambiguity. Second, cybersecurity is suddenly hot again. The sector has been surging, and Zscaler reports earnings after the close today. Cybersecurity spending tends to be resilient even when corporate budgets tighten, because no CEO wants to be the one who cuts security before a breach. A strong Zscaler report could lift the entire group, including CrowdStrike and Palo Alto Networks. Third, keep an eye on consumer-facing companies. AutoZone just posted its worst trading day since March 2020, despite actually beating estimates. The sell-off was driven by fears about inflation, energy costs, and supply chain disruptions, essentially the Iran premium filtering into Main Street earnings. If other consumer and retail names start guiding lower on energy-related cost pressures, that is a signal the geopolitical situation is bleeding into the real economy faster than expected. This is a week where headlines will drive price action more than fundamentals. Stay nimble and stay informed. Big stories are developing fast. Subscribe to stay ahead of them. This has been the Financial Brief.